Greetings, market rebels. Welcome to this week's macro measure video combined with, combined with the sector situation. It is Friday, February 7th, 2025, and it's just about quarter to 4 p.m. here on the East Coast. I'm Wayne. We're going to get right into it. Let's take care of our trusty disclaimer from Market Rebellion, and then we'll take care of our trusty intellectual property rights notice from Market Rebellion. And then I'm going to do a really quick highlight. I know everyone prefers these videos to be much shorter. That's not my thing, unfortunately, no matter how hard I try. We're going to just highlight really this stuff down here at the bottom, I think is what I'm really wanting to get at. The rest of it, everyone can kind of look into and check out. But yeah, we've been operating on don't let them lull you. So that's worth noting. Let's get the laser pointer going. This is an important line. I think just with the volatility picking up, that's what we thought would probably happen. And I think that's continued to happen, where you've got gaps lower, markups for most of the rest of the week. And just from day to day with news, right, impacting, it's just created more volatility. So yeah, I wouldn't let them lull you. The false, into a false sense of security, the strong leg up really hasn't developed the way that I'd like to see it develop. You can't complain that we bounced back nicely, but there really hasn't been this forceful move where there's a lot of sectors firing and maybe new sectors emerging so much, or even the old guard really powering, right? It's really been a little disappointing in that way. Breadth has shown that as well. Sectors just not there. Mag 7, which we'll talk about this week, just not really doing its thing. And I think the big things down here are the SMH NVIDIA. They saved those from potential, breakdown scenario. We did talk about yet another false breakdown potentially. So hopefully no one was caught off guard by that. They have brought them back, and that's a good sign, but we'll look at it technically, and we're certainly not out of the woods. And I think we're just going to have to stick with this, the low-key, serious, news-neutral assumption, right? Most likely scenario or whatnot. It was very tough last week. And we just said keep your DEFCON elevated due to the story change, which just kind of means that the story was bought big time, built and bought big time. And that's the semis, semis to the moon forever story, which we can just summarize that way. So that is now coming into question. It's way above my pay grade, and I just don't even have the time to really get into that with all the stuff I have to do. So I can't really get to it on my own. I need other folks to chime in, and it's kind of been a analyst wise, that is, to who I read and all that. But I've seen good arguments on both sides of it, so it's tough. It's tough. It wouldn't be the first time that so many were wrong about something. But I kind of, and I guess a lot of people just want to believe and all that. I still think some big things are coming, but like I've been saying for a few years, usually the hype gets in front of reality. There's a really big run based upon the hype, and then there's a retracement when the hype doesn't deliver very quickly, and then you ultimately get the payoff. So the way things move these days, especially when we're talking about semiconductors and technology, it wouldn't shock me if things did start to improve dramatically soon, because it's been a few years, to say the least. It's been a few years since they tried to make it like AI was about to start doing everything. It may ultimately do a ton of stuff, and I think it will. But to me, it hasn't done a ton of incredible stuff just yet, but I think that's why we had some back off, right, in SMH finally. And now maybe we'll see if we have the next leg to that starting at some point, or if there really is trouble brewing and the story has changed. And of course, with this new administration, with Trump in the White House, there's just potential for news, and it can be dramatic news. And you have to be prepared for that. So that's really the quick wrap on what we discussed last week. And as far as this week goes, as you can see, a lot of it is similar. I would stick with that. We're going to stay quick and dirty. I would say it remains right an interesting mix at this point. To say the least, so things are still tricky in my book. The early week traps have been rough on bears of late. That's a deja vu. I mean, that happened again, and that's several times, right, that we've seen this. And then I would say for the third time, I think it's the third time, I still wouldn't get lulled into a false sense of security. This juncture is not something I would dismiss cavalierly, despite the long-term trends. So, just as a note that kind of relates to that, apparently retail has gone haywire. Retail apparently is piling in like never before. I've got a little note on that here with retail gone wild, right? So that can often be a contrarian signal, but a lot of times people want to jump at it too soon. So we'll see, but I wouldn't use any one particular item just to bank on completely. That's why I like to do a lot of different things. Anyway, the major index ETFs, they did recover, but I say the negative divergences are still in place. So a lot of this is just like last week, and I think this kind of end of week concerning fizzle, happened again where they weren't really able to finish the job. I'll look at the sectors in a little while, and a lot of those really fizzled out. Now it's not like it's over, right? You're like, oh, it's done. This is the market's toast because a lot of sectors fizzled out, but really not what you want to see, right? If you think this next leg could possibly start developing, you don't really want to see all these sectors sort of make a somewhat of a half-hearted effort at rallying, most of them this week, not really get anywhere, and then kind of finish poorly on the week. The Mag 7, most members looking worse for the wear, and the sectors, as I noted, are looking rough again. There was another VIX hit. This one was not as enormous, but we did have another, I think, 20,000 lot VIX hit. It's for Feb. So whatever date the VIX expiration, I think it might be the 19th, 18th or 19th, can't remember. But that's out there. I still think there's some complacency. I don't think the complacency is as bad as it was, but it's still out there. And we did see sort of the retail effect where some of those small float names had UOA, and we had some ideas in there. You just can never tell, right? If you're going to get ignition. Some of those things did ignite, but some of them ignite and fizzled quickly. So they usually work best, from my experience, when retail shows up and the market's really running wild, and they start going after those small floaters and trying to really bring about these short squeezes. That's usually working when the market's really screaming. That's when it works the best. But sometimes you do see them start targeting those things, and then the market itself catches on fire. So with the SPY and the Qs and let's say XLF and things like that, potentially very close to or making new highs, you have to prepare for that burst to potentially happen. And I don't even have time to review the whole thing, but I just wanted to note that. But sometimes that's a bad sign in retrospect, that people really get a little too far out there with all their speculation. Probably worth noting, since we've covered it time to time, that gold reserves are being cleaned out from what I can see online. We have to be careful on false breakout or follow through. That space, as a reminder, even if we don't look at it again technically, we've covered it over the last few years, and we know that there's massive technical potential in the really, really big picture patterns. You may want to look at like a quarterly chart or a monthly chart that goes back a ways to really see what we're talking about there. The dollar and yields, that drop is still halted for now. We still have to keep an eye on it, but really there wasn't much to write home about in terms of what they both did this week. So that's sort of up in the air. They're still, I think, under pressure, and they haven't been able to rally. So if you want to look at that positive, that's usually inverse to the market. So that is a little bit of a positive. They're not able to rally yet. The SMH and NVIDIA have to remain concerned still, I think. We talked about the story and how it was bought. This is second week in a row. But really, the support and resistance is what we have to talk about there. I'm still keeping this. I'm just calling this very tough too. For a news neutral assumption coming into the week, I'd still be low key serious. Most likely scenario, very tough one. As I said before, whenever we find it difficult, I would say it's I don't have a percentage, but it's a very high percent in my mind, at least, that when we really can't produce a lean, it's usually a pretty tricky market and a tough one to call. And so you're better off really kind of embracing just complete neutrality and just going with the action without even any kind of a small leaner bias and see what develops. And remember, over the weekend news is certainly possible that could change the dynamic as well. But with fear and greed and the AAII survey at they're near bounce levels right now. I probably won't even show them to save time, but just want to note that. So I would keep the DEFCON elevated due to the aforementioned story change in the semis that some people questioning, right, if all the money that has really flown into and flowed into those names in such a big way is in trouble, right? Because they've kind of stalled out as a package, and maybe just maybe with this DeepSeek, et cetera, it's not going, they're not, that firepower won't be needed the way that folks think or whatever. I don't know the answer to that. I'm just kind of throwing that out there because that's been essentially the nutshell of the argument that I see online. I still don't really know the answer because I feel like there's been good points made back and forth. So I'm not a semiconductors expert. I just think they're a great place to trade. So in terms of the technicals in a lot of the time. So it's worth noting. So yeah, I would bring back the Esterhaus warning because these VIX players can be very dormant for a long time, but more VIX players coming out of the woodwork and these sectors and breadth not acting well, though as well as we'd like. It's not a doomsday scenario, but it's certainly not what you want to see if you think that the natural order of things in a long-term uptrending stock market is that a new leg should be developing. And we had a chance for a new leg to develop, but we failed to. We had kind of a false breakout, or we had a failed attempt to move towards highs, one or the other, in a lot of key places. So not really great. Again, if you're a bull. So on that note, let's get rid of this stuff and let's get into the chart. So I think what I'm going to do is stop the share so I can reclaim all my monitors that get taken up by get taken up a lot of the times by where's the set? And now we have to get back. Wow, it's hiding Zoom from me right now for some reason. Zoom ought to be showing, but it isn't. There, it moved to a different location. Okay, well, I'll start sharing my main screen right in front of me, and that ought to get us screen number 4. Okay. All right, so I think that's showing. Hopefully things will hold up. Brian, Greg, my son, everyone's collaborating. Keep an eye on UOA Pro so I could do a little bit of prep for the video and then record it. So again, with another kind of busy personal situation going on again over the weekend, just because I keep saying going to be that way for a while. So I'm doing the best I can to try to get something out to everybody that can hopefully help out a little bit. But let's extend this line down. We're looking at SMH here on the daily. We're going back, many months, and you can see, how many, if you depending on what you want to look at, there's been a lot of false attempts, right, to break out or break down, and we just keep staying trapped near this range. And you can see, right, the gap down was pretty much bought up and moved back up, and then you have this kind of rough finish to the week. So you're right on the 200-day in purple, the curving line versus my trend lines. So you're right there. You dip below it, but they kept it above there. So they're trying to maintain it above the 200 as of right now. And you're really at the apex of the triangle. So there were two really strong, we could call them false breakouts or false breakdowns. Some people don't even like referring breakdown, but I think it helps when teaching people that are new. So that's what I've been using for a very long time. So in terms of the breakout, there you go, false breakout, return down, right? We kind of know what news brought that about, and then you have this news where that looks like a breakdown, and of course they move it back up. They do another drop, not really a breakdown, but really that gap down, and then they just move it back up, as I said. So right there, you're at a place where you really should have done something by now. because you were so deep into the apex or near the apex, but they weren't able to do anything yet. You're right back near the apex, but you are on the underside of that support line, which I'll make blue right there. And we've been charting that for a long time. It hasn't been able to get above it yet, but you are above the 200. So, I could have gone with my old reliable betwixt and between for my description, because I do think this along with the mag 7 and other factors, of course, are just such a key watch. And I think this looks, to me, this still looks concerning. I don't think that the uh, I don't think that the technicals look great here yet. I think there's problems here at the moment. Things change quickly in the modern market, so everything could happen, as we know, very quickly, and you could be flipping from, I think, a predominantly bearish view to a bullish one. But that's also kind of the nature of symmetrical triangles themselves. But I'd say overall, this thing was very close to losing the 200-day. They fought back. You just heard the bell. They held it. Okay, congratulations. But looks concerning. Just looks concerning still at this juncture. So that to me was a good starting point to make this critical sector situation right now, juncture that we're at, a highlight. And I think that really is important. Here's NVIDIA, and that's trying to do the opposite, right? Got narrow Bollinger Bands, but got down to the lower Bollinger. And then on Monday, then of course on that gap, and then they moved things up pretty much all week. Now we did have the good news is we had an idea in here that we put out on Monday, thinking they might try to pull this off again. So I hope that worked out for some folks in our Rebel Pit Essential, I think it was. Hopefully some folks were able to get involved in that. But you're trapped now near the 150 in rust, the 15 in red, and the 20 in light blue. That's where you're at right now. But you could see how quickly this could change, where a lot of people who like SMAs would feel better about this if we're back above the 50. Of course, it's already back above the 200. So there's some positives from that crowd. They'll like that. I still think, right, certainly the daily's looking better, but I think the bigger picture charts here still look concerning, right? So will this stock, though, given that it's only a few more weeks until we get to earnings, will the stock really perform poorly in front of earnings, right? That's a big question. That's probably for someone who's got the time to really focus on the semi area and so on and so forth. I mean, I would be surprised that usually you don't see this type of a stock in this type of a market that has been in place for a while. Normally you don't see the poor performance in a few weeks leading up to EPS. So, I mean, to me, like in most cases, the EPS runway, if you will, or lead in pre-EPS run potential, that usually helps stocks out, in my opinion, overall, in a bull market, when you're inside of a bull market. So that to me would mean, this should be a little bit more buoyant. But again, with news being what it is and the story maybe still in question for some people, that's probably the bigger deal. So I don't think that's an easy call right now. I think that's getting to be a tougher call. Why is it? Okay, I got a little bit of weird coloring over there. I'm like, what's going on there? And you're really not at any kind of an extended level RSI wise on the daily. You're really near 50, right? So it kind of tells you, right, that you're in the middle of a bunch of SMAs. You had a really strong bounce from where you were. You've got this potentially this looming EPS that could provide buoyancy for the stock. You've got potential for gap closure. The funny thing is, right, that SMH is kind of looking not all that wonderful at the moment, despite what this biggest dog of them all really did this week. So not really, that's really not a good look. But I would think, right, if you forced me to make a determination, I would think if we go with a news neutral assumption, I would think they tried to take this back up a little bit further. And that would be my assumption, that with a 50 RSI, the bulls having seized control of it all week, and the whole excitement factor over upcoming EPS, I would think that they try to take this up, which should help buoy SMH a little bit, certainly, and maybe even, of course, the major market index ETFs that we chart. So we may as well jump to the Qs from there. And so they had a similar week, but look how they performed today, right? So they had a similar week to Nvidia. Everything was going along swimmingly. I think Trump maybe had started talking about more tariffs. Again, that's why one reason we're kind of on the volatility bandwagon in terms of trade expecting volatility. So if you're new, what does that mean? Well, the way that I like to do it is to dial into the market environment I think I'm operating in. And sometimes you're in a market environment that's tough to call. And sometimes you have ones that are really news driven and the news can fly fast and furious. And I think you're in something like that. I don't think you're in a strongly trending market, which of course, most of us, I think, prefer. Me, certainly, I would prefer that. But that's for the best for, I think, for directional traders. But when it comes to this kind of a thing, some people like the flipping of, back and forth flipping. The short term, super short term people do, but probably swing traders like to have more of a trending action that lasts for several days, maybe a few weeks even. But anyway, right now I think you're in this news driven market with this kind of herky jerky with some volatility. You've got news impacting frequently. So that means that you make adjustments more robotically, right? You don't wait around and you'd rather not overstay your welcome, right? You'd rather be a very quick roller or a trimmer and probably not go for these super outsized gains that tend to happen when you're in a stronger trending phase. So it's easy to say in retrospect, of course, but that's a very strong trending phase that I'm mousing over right now with my cursor, clearly, right? And so when you're in that, and you could say, well, how would you know that would last? You really never know. But the point is, when you have this really steep sell-off, right, you have to now say, well, the bulls are trying to regain control. And if they do, there could be a really nice bounce, because usually, right, just think of it as a trampoline. Usually when you usually get something, right, kind of a response to something that's sort of akin to what preceded it, right? So that's something, not a rule that I go by, but a general kind of guideline or expectation that if there was severe, their potential's there for a really nice bounce because the sell-off was really severe. So you don't have that here. You have what looks like a lot more noisy situation. And so you've got to be probably trading it that way. So inside of that, the long-term view is still up, right? So that's why, if you wonder, why do I keep saying, like, let's stick with the long-term trend? I would say 95% of the ideas in UOA that I've worked on, and a lot of it has to do with the paper, which means that, I'm beholden to whatever paper shows up. So if it's all bullish, there's not much I can do about getting bears in there. I could start guessing as to which ones I think are hedges or preparing in case they are hedges, but that really tends to ruffle a lot of feathers. And so I try to minimize that these days. I don't really like doing that because, as a former market maker and desk trader, I know that a lot of synthetics trade and a lot of hedges trade, and I did a lot of them myself, and so I think professional traders prefer to have a stock position and hedge it with options rather than just have an options position, when you're bigger. And that's the preferred way to do it in most cases. So a lot of hedges do trade, and that's what it is. But I've tried to keep that minimized. The trend has been very long and strong now since I started doing that, maybe like a few years back, and kind of just cutting back on that so people didn't get frustrated that I looked at something as a hedge that they wanted to believe was a legitimate positioning. Some new folks, I think, get that way, but that might have to make a comeback if I start seeing bigger problems and in this market, and I'm still not getting enough put flow to, I think, adequately put our log where it needs to be. Essentially, I want folks to have ideas they can go to when things are maybe starting to roll over. Anyway, here's a little bit of a negative divergence. Not really, right? Where you've got sort of these lower highs here, not really a great divergence example, but you kind of have similar highs. You're not far away, but you can see the readings were much, much better back over here, right on this high than these couple of highs we have here. It's not over yet. You are below this line that we've kept in place, kind of in the middle of this channel, kind of bisecting the action. So that was interesting that you're struggling there for a lot of the past sessions. You've gotten close, and you have this little island thing that wasn't able to hold above it. So the line continues to be relevant, so I continue to keep it there. But you're really close there where you could break below that 50 day in gold or yellow, which is right near the 20-day, and you could then be right back under pressure, right? And I think you could probably take a line out to there and all that. But yeah, that could quickly happen. And you could quickly reverse back above, right? So let's not forget about that. Let's get why it switched to percent. This is something I'll never know why it does this to me. Feel like it happens randomly. But all it would take, right, the way this thing trades, obviously, is you find support here, the 10, 15, 20, 50, where you should in a long-term uptrend in most cases. That holds, they start moving it back up. You're right near key resistance, and then you get through, let's call it 534-ish, and you're really, one decent little move at that point towards attacking the all-time high. So if you want to know how somebody could be concerned at one moment and then start feeling the bullish vibe the next, you can talk about a chart like this one where you'd have to be forced to do that. You start breaking below the 50 and there's negative news out there that the market's been reacting to, like tariff news, at least momentarily. You could have a quick breakdown. And otherwise, right, if it doesn't happen and they just decide to support things and they take a little bit of the short-term overboughtness out of here and start having a higher low gets put in here and you start working your way up, you could be breaking out to all-time highs before you know it. So that's how dynamic you're thinking, and I think your approach has to be in the modern market, where that's why you'll often hear me try to say, like, I'm not really a table pounder. I really believe more in trying to help people to think about being nimble in the market. I think being nimble is a lot more important than me being a table pounder, because I think being nimble is just an absolutely critical aspect to successfully trading in the modern market. Probably always has been, but I can't really testify to that way back when. Same thing in SPY, right? You could see we have a line there. It was playing around with the line today, fell back below it, but you've got the 20 and 50 right there as well. So again, this holds, or even you would have a little bit different of a technical picture if you follow the 100. That would change a lot. But if you hold here at the 20 and 50, start working your way back up, the first thing you probably want to start cheering about if you're a bull in that case would be this line right here. If you're able to take out that little bit of resistance right there, then you're sort of on your way. Your next thing will be the high at 610.78. But really quickly, right, with just maybe you open a little weak on Monday, they do the same thing, they work it back up. You could be breaking out. I mean, some people are going to kind of call this a flag. I can go along with that. I'm not really a stickler on it has to meet really tight criteria on these technical patterns. I'm kind of more or less fuzzy logic oriented that way. I've mentioned that many times. So yeah, I mean, really strong move, flag lower corrective activity, and then you put in a higher low, which I call, if you're close to resistance, I call a base camp. Don't need to spend a lot of energy to get to resistance. Take out that first level. That leaves you with the all-time high that you're trying to zero in on, and it really isn't that far of a push to get there. I mean, 1.5% almost gets you there from where we are. So not a big move over the course of a week. So don't rule out anything, and if yields in the dollars start to drop off, that would probably help the cause as usual. But yeah, so we're really in a tricky spot because you have some things that you could see where the scenario could change quickly and look good, quite good. You can't rule out false breakouts, by the way, but I always say that just to keep reminding people that are newer. But even if you do start going, right, you're not out of the woods until you really go and probably come back, retest former resistance, find support, and then go again. That's usually what people like to see, but you don't always get that chance. Anyway, again, not a bad week, Monday through Thursday, but late Thursday into Friday, not so great, right? So this is also backing off in the diamonds. And, but again, you're not far away. I mean, you really are only about 2% away. So we'll see what happens. You could say, well, hey, there's some weak readings here on this lower high. There are, right? That's not looking good. You add that together with the market breadth and sector activity, it doesn't look good. But remember, fear, greed, AAII. If you assume news neutrality, nothing crazy comes out of the world, nothing severe comes out of the Trump administration that really adversely impacts the market, odds are they try to find support if they let this drop a little bit right near the 20 and 50. Now, two of them probably most widely followed SMAs that so many people keep on their charts and have been for decades and decades and decades. So you would expect this to support without a news driver. And then you see what happens from there. You see if the rally attempt is weak, or you see if the rally attempt has a little bit of moxie. And then you go from there. IWM, we'll cover this one. This has been a great trader at times. Of late, I mean, you can't really say it's been bad to trade. It's just been, as the market has been overall, a little bit on the noisy side. Another false breakout reversal. This thing is great at that. It's a good trader. That's what they pulled off again. It's support. It's below the 50, as you can see in gold now, supporting on the 20. So now I'm having a monitor kind of glitch on me a little bit. Anyway, support's on the 20 for now. You could see the 150 provided support on Monday. That might end up happening again if there's more weakness, but I think you're just waiting. We all know, I think from prior videos, if you've seen those, just how much potential's here. I think this would be a great sign if this really got going in earnest. Really took out that 245 level, which it touched basically 2 times. If you go back and look at the chart, which we won't, but that's what it needs to surmount to really be on its way. But yeah, I'm not convinced that it is yet. I think with the way that yields have kind of been stubborn, and the way that the economy really is, and a lot of the statistical chicanery that went on, that's maybe why this really hasn't gone anywhere. Because if everything were true, it was reported, only too happily by the press when they should have been, I think, been more critical of numbers. Yeah, you basically end up with small caps really not crushing it, really lagging behind things. We'll see what happens, but I don't have any major problems there. I think they could turn into a problems below it could turn into a big problem below the 200. I think just like other things like SMH, like Nvidia, on balance, they're still a little concerning, but it's not right at this very moment. They're not at a point or a juncture that we would start to go into panic mode over them. So we covered a lot of the main things. I'm talking more kind of big picture feel for coming in next week. And I just want to point out that we had the XLF, right? And I had I put a bullish idea in or two on this one, but I had to put a note in, like, watch for false breakout, possible double top. Here's the possible double top too, and you have a little mini potential double top, and they reversed it. So we don't know the outcome fully, but this was another one that reversed. It had been strong, and you can see with the blue candles showing up, leaving us feeling blue, right? If we were bulls, things really didn't end well. The week just did not end well. A lot of sectors really didn't make a ton of progress this week that we would like to see make progress. Discretionary, despite what Costco, I think, was doing at one point, discretionary rolled over. The oil looked like it was going to try to put something together. That fizzled out completely. Technology, which they bounced it and squeezed it, ugly finish. That's really an ugly candle to finish the week. And then world beater XLC makes a new high, but finishes poorly. So probably XLC still one of the better looking charts in terms of showing strength. Real estate, we had a couple ideas come in there and thought that could bounce back more in a bullish market. That didn't really get off the launch pad. So it was one of those weeks where they came in, they got a squeeze going. They made things hold up, kept things buoyant, but you really can't be impressed right now. And I don't think you can be when you look at these charts, you can't say, well, we're right on support in all these things at this moment. And if this stuff gives just way a little bit more, all this stuff's in trouble. Some of these things are in trouble in, maybe not such an obvious way where they would start to lose, I think, the short-term support fairly quickly. I would probably drop my line about there. So there's going to be naturally other forms of support below there, but you really don't want to see something lose sort of that angular support, because that's telling you that the strength that was there has left, at least for the moment, right? And some of these things are a little bit on the vertical side where you're getting up there on your, you're probably at like a 65, I think it was 65-degree angle on there. This one clearly would be a very high angle on XLK as well, right? So if we take this and we come straight up with it, you could say, well, you can't expect something to stay that way. No, you really can't, but it is closing below that, right? So in this, we could take another one down here in XLC, and you could say, well, you don't want to get too bearish on that. And you don't, I agree. It's been such a strong area, but if they start coming after everything to sell it, you can get problems. So a lot of things are close to now that you could sort of draw your own lines on other ones. So there's a lot of things that are close to maybe falling below the first level of trend line support in short-term trend lines, right? Your near-term trend lines. So not a good look. The fizzle was not a good look. The current complexion of these charts as a package is not a good look. So you could take that for what it's worth. I'm going to bring the breadth, kind of our messy breadth look over here. Let me dump these for now. I don't know if we'll come back to them, but we'll maybe come back to them. Here's your market breadth. Now, here's against IWM. Let me get SPY up here. Not that it matters, it doesn't change the data, but just so you're looking at the market at the top. Let me try to crunch these a little bit so we can see a little bit more of the action. And right, I could even put a support line under here, right? I could put a support line under here, and you get the point where when you lose that, it could take a little while to get back there. You're not really powering anymore. You're kind of playing on the defense and trying to recover. Right now, you're close to doing that here, and you had sort of this McClellan just rolling over. Now, the McClellan summation is sort of still rising in orange there. I could try to make that line a little bigger, but yeah, there it is. Still rising, but that's sort of slowed. It's kind of petered out because the oscillator just continues to worsen with lower highs. So the oscillator's not looking good. New highs versus new lows. They were certainly doing better right midweek, and then the way we finished again was rather poor. But this really isn't that impressive yet. It's not like we're getting some of these really strong bounce backs that we'd like to see. So it's just not there yet. The percentage of stocks rising above their 50-day, their 100-day, their 200-day, not terrible, right? But not stellar, right? So that's also petered out. Now, if you compare that to when you saw other highs or similar highs to this one back in here, your readings are worse. So some people are going to look at that as a divergence. I'm not saying you should. I'm just saying some people will, and you got to keep that in mind. So look at the kind of readings we were getting back in here versus what we're getting over here now. It's definitely a lot lower, right? We were getting say 70 at lead up here. Some of the ones I saw 70 stocks, 70% of the stocks. And then it looks like here you're getting what, 54%, 50, mid 50s, depending on what you're looking at. So again, it's not atrocious here, not atrocious, but not that great. Advanced decline cumulative, right? This is also sort of not as strong as it was. Not terrible though. So what I'm looking at is overall, and I think overall you could see that just the oomph isn't there at the moment. So you could say, well, we almost made new all-time highs in this or that, and you almost did, but the oomph isn't there just yet. Maybe it will come, but at the moment it's not. And so overall, I think there was a little bit of a downtick in breadth in terms of how I view it. It just didn't have that follow through. It was doing better consistently. It kind of ended the week poorly. A little bit of tail off of the McClellan oscillator. So to me, that and sectors make me a little concerned. That's where I'm at on that. And that's why I'm sticking with kind of where we stuck last week and just saying vol's tricky, and let's not get lulled into a false sense just yet. Now, if we do I'm going to do this. I'll do these individually. Here's Apple, and I think you can all see that. And what I'll do is I'll give us like 6 months instead of longer term, so you can hopefully get a better picture. That's a little bit bigger there. Well, let's do 3 months so everybody can see this a little bit better. Yeah, that'll help you. But a lot of these in the Mag 7, right? They're just not looking that great with the way they finished, right? So Apple kind of rough close. Amazon was doing better, but it too had a sort of a poor end of week, right there. Meta, well, I guess I better do Google. We just added a bearish idea. I can't remember our trigger level. I think it was in Google. It was somewhere near here though, so I guess it dropped down decently. Oh yeah, so it dropped down a few bucks. Hopefully, someone made some money on that one just with some day trading today. But with this gap that it left here and kind of coming under pressure, the reaction to the EPS, this is sort of coming into me like as a possibility. If the market itself is weak, this could definitely trade down to that 100 and maybe even take a shot at closing that gap at 176. So I had to get that one in there. We're desperate for bears, but that doesn't look great. So the first couple stocks we look out of the Mag 7, not that great. Meta has been great. We had a bullish idea. I can't remember. I almost want to say we had like the 700, 720 or 705, 725 for this week. So I hope folks did well in there. But the problem in Meta is, what do you think the problem is? That's going to come up as what? An 80 RSI, right? So that is just overbought. Not to say that it's done yet, but right, if the market gets weak, you've got to think that there will finally be some profit taking if the market gets weak, which you probably could add Meta to the list, right, of weak Mag 7 performers. Microsoft, look at this, weak, right? So we know what NVIDIA looks like. Excuse me. That is bouncing back. Like I said, I think the buoyancy could help it heading into EPS. And we also know that Tesla was weak, right? That looks concerning. I think Elon is probably not helping his popularity in terms of those with certain political leanings or affiliations. So he's probably helping himself with some, hurting himself with others. So it is what it is. But there you go. I mean, Tesla right there, getting sold and closing on the low of the week and making a new low for the year and producing a multi-month low, right? So that's another obviously big name. And then we can bring in Netflix, which is a lot like Meta, just not as extended, right? So it's got a 74, 75 reading on RSI. And it doesn't mean it has to go down, but right, to give some back after earnings, to give some back after getting stretched, to give some back in a risk off market wouldn't be crazy, right? So if those kind of stalwarts in the Mag 7 start to join the party that Apple and Amazon and the rest of them have already shown up for, that's potentially a problem. Oops, let's get them all in here as a package. Surprisingly, I think as a package, they really don't look as bad. I think that the two massive winners that we saw are really doing a good job at keeping well, I should add NVIDIA to that. They're keeping the other ones. I don't know why I just did that out of alphabetical order, but they're keeping the other ones buoyed, right? So it's a good thing that NVIDIA started doing what it did, because otherwise the whole package would look kind of rough. But you could see that, right, this is sort of flatlined here for a few weeks, the whole package. They had their earnings season and they really were not able to do much with it so far in terms of moving the whole package up. So, you have to be a little concerned with this candle and you have to be a little concerned that you're tailing off in your readings and momentum, and you're really kind of near the low. You kind of came back towards the lows of the post gap days of this trading week. You held up here, but you're not far away from taking out the lows for the rest of the week and potentially visiting the 20. And I know we're charting it as a package, but you get the idea. So, not a great look. It could change obviously quickly, but not a great look to close out the week. That's just the bottom line. So I think on that note, we're going to start really wrapping it up. But I did want to just mention that we've got the gold futures. Let's see what Thinkorswim will give us. The gold futures are there, right? You can see you've got this new, these are, I think, the continuous futures, I want to say, and you've got the new all-time high. So this is something you may want to look into. As I said, I think this is extended right now. So, I think you have to be a little careful in the space with all the news hitting the tape and the fact that it is already extended. So there could be a little bit of a pullback here, and then we'd have to evaluate how that behaves if and when it does that. So, but keep an eye on the big picture. I think that's really my main message. If you want to look at, let's say, we'll look at GLD, and I'll try to give everybody a quick monthly on that and silver. I click weekly as I say that like a dummy, but this is what we're looking at, right? This has been firing. We talked about it a few years ago that if this cup and handle fired, there should be some really nice follow through. And lo and behold, right, these were projections, and it's just shredding, right? It's just shredding. So the borrowing costs for shorts, I believe, in gold and silver are skyrocketing. Silver not taking off typically does lag gold, but the pattern is powerful in there as well. And if I can get you a better view, there it is. There's your big picture monthly. I didn't think I was going to do this, but I don't want anyone to necessarily jump in. If you're new, I just want you to be aware of what's happening here on the big picture. And this stuff, this thing can really take a leap when it gets going. At times, it's not common, right? It only happens every so often. But when it does start to rumble, it really can rumble. So just be cognizant of that. Maybe you want to do some hedging. I'll do a quick look at the dollar DXY and TNX just for old time's sake, when I used to be able to spend a lot of time looking at these things. But you can see the dollar. Oh, no, you can't see the dollar. That's monthly. We don't really want to look at monthly. I want to try to get us a better look. And here's the dollar on a 6-month chart, DXY that is. So, right, kind of sidewaysing. If you look at the big picture, very strong move to this point, a pretty controlled, milder pullback and holding at the moment. So you can't give up on it too soon. I hope it doesn't continue to rally. I mean, ultimately, I do want a stronger dollar as someone who has everything denominated in dollars, despite all the psyops to tell me weaker dollars are better for me. I like the fact that my dollar buys more of other in other currencies, but the reality is that it probably hurts the market, probably hurts the economy, the way that these guys have got everything rigged these days. So we'll see. I think that the problem here is that this dip wasn't that bad on the basic indicators we've got here. So it's holding above the 50. You got to look at this. If it gets back above the 20, it probably tries to start working its way back up, probably. And you might have the market would probably be under pressure if that were to happen. If it starts falling apart, as I said earlier, I think that's going to help out. That's going to help things. And these usually do move in tandem to a degree. I mean, they're not perfectly correlated, but they're usually fairly correlated. So yields coming off still from the high that they put in, I think this is a really good sign. I continue to hope that they go lower, like so many of us do. But they're still kind of sticking around, being a little bit of a pesky right now, I guess would be a way to put it. So again, I wouldn't worry too much unless that starts getting back above that 20 day, just technically. I'm not, I know this is just a calculation, but I'm just saying that's probably a sign technically that, yields are maybe going to try to make a run for the highs again. If they don't, they start tailing off. I think that's, again, a really good sign. We're not trading this, but you get the idea. That would maybe probably come down towards these other lows, and then you'd have to reevaluate. But I really do hope they fail here. The good news is the short-term SMAs and these things have rolled over, and they're going to hit, if they do try to make it up, they're going to hit declining SMAs. So declining SMAs are what we prefer, right? I mean, if you're a bull on the market, or and just a bull on the economy, you want to see them hit the declining SMAs and get stopped in their tracks, as the declining SMAs have done so far, right? They kind of stop them from really going anywhere. If you want to phrase it that way, we want to continue to see that happen, and hopefully continue to see them get walked down. And the VIX, right? This one sideways, got super low at one point. You were in the 14s, believe it or not, earlier today. That's pretty low for how the market has been, considering the volatility we've seen, considering the Trump effect and all that. Certainly not near the lowest lows, but fairly low, considering right where it started the week. But yeah, basically, right, it's been pretty good too. This is kind of confirming the discussion we've had about early in the week weakness, where the VIX pops and then they work the market back. VIX pops, they work the market back. VIX pops, they work the market, back after the market's gapping lower on all this stuff. But yeah, you've got to see big line here, right? So these lows near 14 in the VIX, that opens the door to plumb lower lows. And if you say above 14, you just treat it as normal VIX activity, probably getting above, what would that be? Let's pull a level open. Yeah, I think above 17 starts getting a little more serious, the way it is right now. But you need to really get above, to really get it going. I think you're going to have to get above something like that 2021 level. It just can't, hasn't been able to stay above there for too long. Recently it's popped above it and retreated right back below it. So, but I don't think anything is gearing up there yet. I think one good sign that we can look for is when the VIX, you kind of look at it and say, wow, the VIX is sort of staying higher than it seems like it should. That's when, I've noticed that's when there's maybe something brewing. Right now, it seems like there are some VIX players, but a lot of people seem like they'd be caught off guard if something happened. So I think that would be sort of like an unforeseen news thing by most, if we did sort of get a VIX pop out of nowhere, because I just don't think a lot of people are anticipating that. So on that note, I'm going to wrap things up. I'm going to say thank you for tuning in. Hopefully everything recorded this week and there aren't any hiccups. I hope something that I share with you this week helps you out in the upcoming week, or some week in the future. And again, just stay disciplined out there. Keep being a real disciplined player until all this sorts out one way or the other. Know that you can collar things off. Know that there's other hedging strategies. Know that Market Rebellion can teach you those. We have great guys with tons of experience, friends and things like that of mine that can really help you out to understand what you can do and how really easy it is, and help you fully understand it. And that way, if you do get concerned, you want to protect things, you can, and then you can really unprotect them very quickly. And which is why I call some of this stuff the pause button. And then you pause, unpause, and you're right back as a long, if you're long this market or long stocks in a significant way, and you just kind of feel a little bit of heat and you want to just sort of ride it out for now and see how things develop. Remember, you can always unhedge, right? There's nothing wrong with that. If you lose a little bit on a hedge, it's not the end of the world. It's better than really feeling like you should have done something, seeing the market get really hit hard and then regretting that you didn't do anything. So you don't want to overhedge. You don't want to do this all the time. But if you're getting those vibes, or you think it starts getting concerning, which I don't think we're there yet, but if we do start getting there, remember, you can do that. So on that note, I'm going to wrap up. Hopefully this will get out on tonight or Saturday, and that way everyone can have a great weekend and get this viewed if they want to at a more convenient time. So everyone, take care, have a great week, and I'll see you all soon in some form.